Hello there, my name is Andrew Thake. I am from Minds and Money, and I would like to welcome you to our Minds and Money at IMARC Global first pitch battle of the event. And without further ado, I would like to welcome you to our host, who is Gavan at Collery, OAM, IMARC Ambassador and founder of the Melbourne Mining Club Steering Committee. A warm welcome to you today, Gavan.
Well, thanks for the introduction, Andrew. And for those who haven't been to a pitch battle before, the rules are quite simple. As the great Mark Twain once said, I didn't have time to write you a short letter, so I wrote you a long one instead. Today, we're going to focus on the short letter, on the short presentation. So each of our miners has 3 minutes to pitch his story. I'll provide an alert after 2 minutes to that speaker, and after 3 minutes, I'll say, stop. We will then have 7 minutes of Q&A for each pitch from our esteemed investor panel of judges, and they are Matt Griffin, who's the portfolio manager with AMP Capital, Kingsley Jones, the chief investment officer with Jevons Capital, Paola Rojas, managing director of Synergy Resource Capital, and Jeremy Atkinson, director of North Shore Minerals, which he assures me is in Perth these days. After each miner has delivered his pitch and endured the Q&A from our judges, I'll invite each judge to say which company or which project they would hypothetically invest their $1 million in and why. Now, our judges can either allocate all of their $1 million to one company, or they can split their vote into 2 lots of $500,000 US. The miner with the most votes, the most capital, or the most allocated investment wins. So, to our first contestant, Andrew Corbett, from Managing Director of Kingston Resources. Andrew, if you can share any video slides that you have on the screen, and when you're ready, your time starts now.
Thanks, Gavin. I'm just sharing them now. You should be able to...
I haven't hit the button yet. Now I have. Yep.
Okay, can you just see my screen?
Yep.
Great.
Yes.
Thank you, everyone. Thanks, Gavin, and thanks, Minds and Money, for your time. And always a pleasure to be presenting to a large audience, large group. And today I'm going to talk to you about Missima. Missima is a historical project, so there's going to be a bit of a history lesson today, and then I'll obviously bring it back to where we are and where we're going with the asset and the development of the mine. Kingston got involved in Missima in 2017. We're a 49% joint venture partner then. We are now 100% owner of the asset. It is in PNG. It's an island off the coast to the east of Port Moresby, about 600 kilometres. Missima's been producing gold for over 100 years. It's got a fantastic historical endowment. There's over 7 million ounces to date, and in fact, we're on our way to 8 million ounces with our recent drilling program. We've recently upgraded the resource that came out in September to 3.8 million ounces of gold and 22 million ounces of silver. Most importantly, that upgrade delivered 2.5 million ounces of gold in the indicated category. The current reserve is also being reviewed and updated and will come out in March next year. So that reserve of 1.35 million ounces, which by the way is the second or the third largest undeveloped reserve on the ASX gold reserve, is being updated. And so there's another 700,000 ounces of indicated ounces in our resource since we did that reserve. So I'll let you guys do the maths, but you can see where the reserve's going towards and marching towards that magical 2 million ounce number in the future. It is a brownfields project. It operated for 15 years with Placid Dome and produced 4 million ounces of gold. That's right, 4 million ounces. And we're currently sitting here today with 3.8 million ounces in resource.
1 minute to go, Andrew.
Oh, sorry. Having some trouble here. Anyway, we'll finish on this slide. So the history is quite interesting. The gold price when Placid closed the project was $279 an ounce. The gold price today is obviously considerably higher than that in US dollar terms. You can see where Missima sat on the cost curve in 1995, bottom quartile there. Very low cost open pit project. It was only modest grade in the 80s and 90s, only 1.2 gram reserve grade, but averaged 230,000 ounces per year. What's important is the location. It's got great logistics. You can see that's the old processing plant there. Our feasibility that came out in November, fantastic set of economics, 822 million NPV. This is pre-tax at 33% IRR. So a 17-year mine life and 130,000 ounce production rate. That's our base case.
Andrew, so just wrap it up, mate.
That's our base case feeding into our DFS, which is due in March. Thank you.
Okay, look, thank you, Andrew. We'll go to our judges in a moment. I must say that in my many years in the mining industry, I've been privileged, and I'm not sure too many people have, of being a guest at Missima. And one of the areas that won me over incredibly was the relationship between the mine site and the local community. It's very special, that relationship there, very special. So we'll move to Q&A now, and we've got our four judges in Matt, Kingsley, Paola and Jeremy. Who would like to ask the first question?
I'm happy to jump in if that's okay.
Andrew, Jeremy.
Yeah, Andrew, I just wanted to ask you, it's obviously a fairly lowish grade project. You got a cash cost which is just over $1,000 an ounce Australian. So obviously there's some magic dust in there. You know, your mining cost is pretty low there. I think it's like $10 or something a ton on a 5-to-1 strip. So just talk me through that and how that's going to be possible.
Missima is very soft in terms of the rock mass, RQD, in basically on all metrics. So you're talking about a bond work index of 11 to 12. So low cost processing plant, very coarse grind, 250 micron. So both your processing and mining costs are very low. And in fact, the plant at a 5.5 to 6 million tonne throughput only requires about 16 to 17 megawatts of power. So it's very simple to explain. It's basically very soft and very low cost mining and processing.
Okay, thank you.
Okay, other judges?
Hi,
Yeah, I'm Paola. Kingsley here.
Sorry,
Andrew, just quickly, the initial slide showed some of the topography, but just on the island, how close is the mine to the coast? And I think that last shot was where you said the processing was. Just speak to us quickly about just the layout and the distances between these things.
The Umuna pit, which basically is 96% of the ounces, is about 2.5 kilometres from the coast. The processing plant is located on the coast, so there's one single haul road downhill. Umuna pit is about 300 metres above sea level, so not mountainous and not on the coastline in terms of the mining operation. So the processing plant obviously will be. It's actually very hard to see the pit.
Okay.
Andrew, I'm going to ask one. I'm just interested in the infrastructure you've got in place there. How much of it can you utilise? How much is needed to be refurbed? And sort of the capex spend you'll need to get an operation up and running?
So we need to rebuild the plant. So that's 200. The total capex for the project is 283 million. We get to utilise obviously a lot of from Placer's history. So the port, the haul road, the roads are in place. Airport's built. We currently rent 4 historical mine houses. So there's a lot of advantages, and access is actually really good. So logistically, we can barge large fleet and equipment straight to the island and literally drive the haul packs off. So there's infrastructure actually very good.
Thanks.
Okay. Other judges, feel free.
I wanted to ask you about the jurisdiction, so about PNG. In what way what you guys are doing is utilizing the advantages of the jurisdiction, and what challenges do you see in terms of to that?
Yeah, so the main advantage of Missima approvals is that it has been done before. So we are building the processing plant, the haul road, the same existing haul road, and we're mining 2 pits. So we're seeking reapproval of a brownfield site that has already been disturbed. So there's actually very little new disturbance coming from our design and our project. So that's the big advantage. both the mines department, so the MRA and SEPA in PNG, are very familiar with Missima, have bookshelves. You go in their offices, there's bookshelves in Missima, and you can see the history. So we effectively are using that to our advantage and we're following Placer's footsteps. We're trying to replicate the processing plant size, the mine size, the haul roads, exactly to help with that approval and de-risk that approval process. And jurisdiction-wise, look, PNG has had its moments. We all know that, but is definitely opening back up for business as we speak. I mean, our neighbour Woodlark is just commencing construction. They're 100 nautical miles north. You know, you've got expansions. Newcrest recently announced their expansions at Lihir. You've got St. Barb's looking at expansions at Simberi. The Porgera mine is on a restart. And I just want to comment on Porgera. I mean, it operated for 30 years without stopping. So, you know, the country is opening up for business and projects are moving ahead.
Okay. Time for two more questions, judges.
Can you just give us a bit of a flavour about the sort of proposed capital structure going forward, Andrew? How are you going to finance this thing? Because obviously that's presumably the next key steps of the DFS are going to get financed, right?
That's right. That is our challenge from $50-60 million company. How do we get the right capital structure in place? It'll obviously be a debt component on, you know, I would say 50-50 at the moment, but you know, that's all still to be finalised in terms of debt and equity structure. But we're also looking at other ideas and concepts because Missima's got a 20-year mine life or marching towards that. You know, it looks like it's going to have a run rate over 150,000 ounces. Do we do joint ventures? You know, what options are on the table to ensure that we do it with the least amount of shares on issue and the highest amount of production for Kingston shareholders? So all of that's part of the strategy for 2022.
One more question if we've got it.
Andrew, what's the tax and royalty regime over there, and are there any third-party royalties over the property?
Yeah, no, zero third-party royalties over it. So we're 100% with zero third-party royalties, which, to be honest, was a huge achievement for our team. 2.5%, so it's a 2% state royalty, 0.5% production levy, which basically goes to the mines department and funds them, and it's 28-30% tax rate.
Thanks.
Okay, we're in our last minute. Perhaps I've got a quick question for you. When I was at Missima in the Placer days, it was one of the world's fine examples of submarine deposition below the thermal. Are you still using that method, and what impact does that have on the unit cost of production?
We are studying both land tailings and deep sea tailings. In fact, this month, we're going to be sampling the deep sea tailings that Placer placed. So that's going to be really interesting for the entire industry to understand the basically regrowth that occurs at depth. You know, it was done, the project already had sampling done in 2008, and there was signs of regeneration then. So that's actually really exciting for the industry. So we're running both strategies. Deep sea tailings is by far the lower cost, as well as we think the right fit, because any tailings facility at Missima will be built basically above people. You know, the population of Missima are all coastal, so we would have you know, villages below a tailings dam, which it's not ideal.
Okay, understand. Andrew, thank you very much for your presentation, enlightening. We might now move to our second contestant, that's Jason Stirbinskis, who's the Managing Director of Los Cerros. Jason, if you can share any slides that you wish to use on the screen, and if you're ready, let me know and I'll start the timer.
Thank you. Hopefully you can see my cover slide there.
Yes.
Great. Thanks everybody, and hello. My name is Jason Stirbinskis. I'm the Managing Director of Los Cerros Limited. We are entirely focused on the Mid-Cauca Porphyry Belt of Colombia. We raised a little over $20 million a few months ago, about 2.5 months ago, and in that we welcomed two very high-profile precious metal funds out of North America to the registry, both taking just a little under 5% each to give us, and then raised with local shareholders to give us 20 million in total. We have two project areas. The Andes project is more greenfield, and the Chinchilla project is far more advanced and the source of most of our success over the last 18 months. But both sit on the Mid-Colca porphyry belt, which hosts many multi-million ounce discoveries. But the bulk of the story is Chinchilla. Chinchilla is made up of a series of porphyry targets in a ring structure here at various stages of advancement, and Miraflores. Miraflores has a DFS attached to it. It's a little under a 500,000 ounce reserve, grading 3.3 gram per tonne. You can see the metrics from the economics there. From the DFS at $1,400 an ounce, so presumably at $1,800 an ounce, or whatever you want to choose for today's gold price, it would be more robust than what you see there. But that's not the main story. The main story is what's happening with our porphyry developments. The main one being Tesorito here, which is just sub 1 kilometre away from Miraflores. This is Tesorito. It's an at-surface porphyry gold discovery. A few things to point out. We are consistently getting between 200 and 300, sometimes even larger than that, intercepts, grading a gram per tonne, and most of them starting on the surface. Now, there's one hole worthy of highlighting, 629 metres at 0.88 gram per tonne with 461 metres at 1.1 gram per tonne from surface. The reason why that is twice as long as every other hole is because we drilled through the body of the Tesorito South, the main porphyry discovery, but we kept on going beyond that, past what usually is the end of the mineralization, and entered another porphyry. So the reason why it's twice as long is because we went through a second porphyry at depth that we've yet to explore in any great detail. The other worth pointing out is these holes here, 24, 25, 26, 29, and 30. We drilled this area testing the northeastern extensions, trying to find the end of the gold envelopes, and actually found the central high-grade area. You can see hole 24, 222 metres at 1.5 grams per tonne with 36 metres at 3.3 on the surface, suggesting a potential really attractive starter pit in that area. In terms of our project pipeline, we have a reserve at Miraflores, we have a resource at Dos Quebradas. Add those two resources up, it's about 1.3 million. Tesorito, we have 4 rigs there at the moment, and targeting a mineral resource in the first half of 2022, and other drill targets, of course, and have been drilled, and then the earlier stage project pipeline.
30 seconds,
in terms of our ESG, I think there's one headline number that says it all. There's about 100 people in the company. 98 of those are Colombians and living in the local town. So we're very much a part of the local economy and part of the local social structure. Thank you for your time.
Excellent. Thank you, Jason. Right on time. Now to our 4 judges. Who would like to start the questions here?
I'll have a go. Thanks for the presentation, Jason. Just interested in access to water, power, local workforce, and if you can comment on if there's any other mining in the region.
Oh yeah, there's the town of Chinchilla is a few kilometres away. I think Sealed Road stops about 1 kilometre before us. High voltage power is 17 kilometres away. The population of Chinchilla is quite significant. The town itself is probably 10,000, but it services a much, much larger area than that. And to answer that question and maybe take a little bit further, to our north is Mako, which is a producing mine, and some of our people that live in Chinchilla commute to Mako to work there.
Okay. Other
and
questions?
Plenty of water. Sorry, I forgot the water bit. Plenty of water.
Yeah, Jason, I've got a question for you. Just on the triggers for share price movement over the next 12 months or so. I mean, you've got a resource update coming up next year. I'm presuming that's going to be the major event. Is that?
Yeah, in the immediate term, there's been a backlog of assays, so there will be a flood of assay news coming out over the next month or so. We're also doing some deep penetrating IP and geophysics. That's on the horizon as well. Longer term, we are in the final submissions for production at Miraflores, and I'm not saying we're going into production, but we're just making sure that the authorities have got that box ticked. So that's something on the horizon as well, those final submissions. And then, as you point out, mineral resource first half of next year.
Paola?
It's the region where you are. It's obviously a really, really good location. You picked a really good neighborhood too. So congrats on that. what would you say are you aiming to have a sort of a large scale regional play, or are you looking to add other assets into this, or are you going to be focusing on this area?
It's certainly that area is our focus, and it's a blend of moving forward on the advanced projects, Miraflores, and then taking Tesorito to a mineral resource estimate. But the area is so prospective. We've got a whole number of earlier stage targets in that area that we want to grow as well, that potentially could evolve into a very significant district story. And as you know, you've got Buritica in the north, and La Colosa and Nuevo Chicuro and similar. They're all multi-million ounce discoveries, and let's hope Quinchilla follows that same trajectory.
Yeah.
Okay.
One quickly. When did you start the company?
Oh, that's a very quick question, but a very long answer.
Oh,
I was the managing director of Andes Resources. We were part of that group that became Los Cerros. So I was the MD of Andes Resources. Mako held the Quinchilla ground. We merged together in mid-2019 and rebranded as Los Cerros at that point. So in its current iteration, mid-2019. But the share price really took off Q3 2020 when we announced the first result from Tesorito, and we went from 1.5 cents to 15 cents.
Thank you.
Great. I got a question, Jason. These are essentially gold targets that you're showing with the porphyries, but is there any show of copper in that area too, given the number of porphyry targets you've got?
Yeah, there is copper at depth, not enough to be sort of excited by. We're running a 0.1, 0.2% copper at depth, and we do see bornite appear every now and then. But the whole of the mid-Colca porphyry belt, some of these really, multi-million ounce discoveries, they all tend to be quite copper poor. There is an exception to that. There's a project called Nuevo Chicuro. People who experienced with Colombia might know it as Quebradona. It's an Anglo Gold Ashanti project. That does have a very significant amount of economics is based in copper, but that's the unusual element. The rest of them are copper poor.
Jason, what's the exploration budget for the next 12 months? And are you having any issues getting access to drill rigs or slow turnarounds from assay labs?
The second part, yes, the turnaround is a real problem at the moment, but we're not unique there. We think we've broken the back of that, and we are hoping to see a flood of assays come through from all the pending holes. In terms of drill rigs, we have 4 rigs running continuously. That has been the case for a long period now, and we don't intend to change that, and we've got a good relationship with our drill rig provider. Having said that, we also have our own rig. So one of those 4 rigs is ours. We invested in a rig last year, and that gives us some economies there. So no problem accessing drill rigs. There was a third part to your question. What was that?
Exploration budget for the next 12 months.
Exploration budget, yeah. With 4 rigs running and this dedicated target generation team that we have, we have a dedicated geologist and a team of 10 or 15 people just on target generation. We spend about $1 million a month. So in terms of budget, that sees us through to well and truly the back half of next year.
Okay. We'll have time for one more question, and so I'll ask our judges to think up one more question. But before we do, I have a question, and that is that in my 15 years at Western Mining Corporation, I had the opportunity of working closely with Germán del Corral, a great Colombian mining man who looked to Australia to reshape Colombian mining law. Did he do a good job?
Well, in the most part, yes. Colombia does have a fairly reliable and predictable system. Sometimes the process is slow, but it's quite a reliable system. But the important thing with Colombia is that you must manage at the state level as well, the individual provinces, if you like, not just Bogota. And so you need to understand how the local systems work. And where in Risaralda is where Quinchilla is based, and Antioquia is where the Andes portfolio is based. So you need to work at that level as well.
Okay, thanks, Jason. Judges, one more question? Going.
What's your market cap?
It's about 90 million, probably 90 million today, I think.
What was it a year ago?
18 months ago, it was 7.
Well, that's good. That's good growth. Well done. Okay, Jason, thank you very, very much for your time. We'll now move to our third contestant, Peter Ledwidge, who's the Managing Director of Mako Gold. When you're ready, Peter, let me know and we'll start the timer.
So We're named after the Mako shark, very successful in hunter. And so we're hunting for the next gold mine in Côte d'Ivoire in West Africa. So, whoops. So here we are in Côte d'Ivoire. We've got two projects, and we've got the Go project, which recently got granted, and it's along the same fault as the Wagnian mine owned by Endeavour. I won't talk very much about that at all, actually. It's 100% Mako owned, and we're about to do a 10,000 meter drill program on that. But our flagship project is an APA project, which we have through a farm-in JV with Purchase Mining, and we've recently signed an agreement with them so that we get 90% ownership. So very good infrastructure in the country, a very pro-mining government, and so much so that we have a bitumen road and a power line on our project. Now, this is the NAPI project, 30 kilometers north-south. It's got 5 prospects. We've drilled 4 of them. We're about to drill the Comboho prospect in the north, 5,000 meters of drilling. We've done absolutely nothing with it so far. We're about to do 10,000 meters of drilling on the Chaga North prospect, where we've got 26 drill holes, including our discovery drill hole of 8 meters at 8.5 grams per ton. So we're going to put 10,000 meters on that. But really, where we're focusing is Chaga, and more recently on Gogbala, where we're using those 2 prospects to come up with our maiden resource in the next 6 to 12 months. So on Chaga, we've got about 45,000 meters of drilling, and on Gogbala, we've got about 10,000, and we're in the middle of another 10,000 meter drill program now.
1 minute, 1 minute, Peter.
Okay. So this is a Chaga prospect. You can see the yellow soil anomaly. A lot of it remains to be drilled. You can see the outstanding results we're getting, big, wide, high grade. The pink areas are the stacked lodes, and we're working south. We're keeping getting good results on that. Now, this is a Gogbala prospect, 4 kilometers to the south. We've recently gotten 20 meters of 3.4, 20 meters 1.9 grams, and another 35 meters of 1.7. We announced those in the last 2 weeks. So you can see the southern part where my cursor is. That's the very southern area where we got those 2 high, big, wide intersects. So we're just about to start drilling there. So those 2 going in, Gogbala and Chaga, going into our main resource within the next 6 months to a year. So any money you guys give us will go straight into drilling.
Okay, 15 seconds, maybe a closing there, Peter.
Yep, okay, so I'll stop my sharing. There you go.
All right, okay, Peter, thank you very much for your time. I now hand it over to our 4 judges. Go for it.
So, Peter, my question just revolves around the sort of geology of the thing. I mean, you've got these stacked lodes, which are sort of going north, east, southwest, and over quite a long continuous sort of continuity. What sort of thing are we actually, what should we be conceptualizing as a kind of resource we might be looking at? Is it large bulk tonnage, relatively low grade, or is it high grade pockets? What are we looking at here?
Our vision is along that 30-kilometer shear that's coincident with the 23-kilometer soil auger anomaly, and that's where we're getting all the good drill results. There's 2 events of deformation, a north-south one and a southwest-northeast, and that's what's given us those stacked loads. So our vision is to have 3, 4, 5 deposits of about 500,000 ounces each. Adding up to, 3, even 4 million ounces. So we're just building it step by step. So if we're talking 2 years from now, hopefully we'll have 3, 4 million ounces in the ground. And at anything over 1 gram per ton, we're kind of hoping for 1 to 1.5 gram per ton anyway.
Peter, it looks like a very prospective land package. I'm just interested in the ESG side. Are there any local communities or farmers or artisanal miners you're going to have to sort of relocate, and any environmental concerns over in that part of the country?
No, very little. There's actually two villages. There's one around Chaga and there's another one not too far from Godbella. The two prospects we're really hammering right now. And we've got very good relationships with them. And we actually have a full-time social person, employee that works with us. We've already started, we've engaged consultants to work towards that, even though we don't have a resource yet. And we've already drilled a water well for one of the communities. We fix up their roads when we do our drill pads. So we've got excellent relationship with them. And one of the advantages of working in that part of a very underdeveloped part of the world is they're living in very basic housing. So basically, one step up from mud huts. And so if we relocate them, we're going to give them, electricity, running water, and so on, which is a little bit different than if other jurisdictions where people have been there thousands of years. So no, we've got very good relationship with the local community.
Okay. Judges?
In terms of capital, how are you? How much cash do you have at the moment? When's your next round on finance, and what's your market cap at the moment?
Yeah, so our market cap's about 40 million. And we recently did a $10 million raise where that was cornerstoned by Dundee Goodman out of Toronto, and then Delphi out of Frankfurt contributed a lot. So we've actually got 33% institutional shareholders. So that gives us a lot of confidence going forward. So at the end of June, we had 15 million. We work the ground hard. So we go to just under $1 million a month when we're drilling. We just took a month off of drilling during the height of the wet season. So don't let that scare you off from giving us that $1 million, because it'll go right into drilling.
Okay, thank you.
So Peter, it's too early to talk about metallurgy and all the rest of it, but I'm just curious, with the part of Cote d'Ivoire that you're in, are there any similarities or analogous operating mines that are expressing, similar kind of geology to what you are finding with your current drill program?
An investor just asked me that yesterday. That's interesting. In the belt that we're in, it's actually quite interesting that the greenstone belt where we're in the Bahamian greenstone is the only greenstone belt in all of West Africa that doesn't have an operating mine. Now it looks like Tiedo is going to beat us to it, but as far as analogy to it, the closest that we come is not in Cote d'Ivoire. It's Lulo-Gungoto complex. It's got a granite on each side and sedimentary and volcanic rocks in between, and complexly folded and faulted. And as far as the metallurgy goes, we did do our preliminary metallurgical test and simple bottle rolls, and both oxide and fresh rock came back averaging over 94% recovery. So we're pretty comfortable with that.
Okay. Peter, it's often said that the capital city of West Africa is Paris. On that basis, are you seeing much investment interest out of Europe and the UK?
Well, we recently got exposure in Europe through getting Delphi on board. So now we haven't really been targeting that, to be honest. However, now I've used some different IR advertising, and I am getting a little bit more out of France and Europe in general.
Okay, judges, minute and a half to go.
Peter, just the other part of the share register, I think if memory serves correct, you've had some strategic other gold players on the register in the past. Is that still the case? So can you just run through what your register composition looks like?
Sorry, I didn't understand the question.
Oh, sorry. I think in the past you've had some other gold corporates on your register. I'm just wondering if that's still, if that's true, or if that's the case, and just what your register composition is between in-stone retail.
Mm-hmm. Yeah, well, we got 33%, as I mentioned, 33% institutional. Board management's got over 3%, so we've got lots of skin in the game. And we do have, we are getting purchased on when we get the permit in our name, and that's in the Minister of Mines' hand. And so that will be the only corporate we have. Basically, doing that, finalizing that deal with them was they changed their ownership in the NAPI project into equity into Mako Gold. So that will be the only corporate that we have. We used to have Resolute on board, but that was a long time ago.
Right.
Time for one more question. If you don't, I've got one. Okay, last question is in West Africa. Last time I looked, there was more than 100 ASX listed companies on the ground over there. Do you see much camaraderie between the Australian or the ASX listed companies, and are they utilising the benefits of that relationship for the industry, for the knowledge?
Yeah, absolutely. As a matter of fact, most managing directors have shares in other companies and competing companies. And yeah, we've got a very good relationship. I talk to guys at Tieto and various other companies. And obviously we don't share our confidential information, but yeah, we play nicely.
Well, that's important, very important. Look, thank you very much for that, Peter. We really appreciated that, and we'll look forward to seeing what pops up next. So, ladies and gentlemen, we're going to move to our fourth and final contestant, and it's Matthew Gill, the Managing Director of White Rock Minerals. Matt, it's all yours. Just let me know when you start.
Thanks, Gavan. I trust everyone can see my screen. So thanks, yes, ladies and gentlemen. And to the judges, I realise I don't have a lot of time, so I'll go relatively quickly. But my strong recommendation would be is you invest your $1 million into White Rock. We have 3 projects. Why you should invest in White Rock? I mentioned that we have 3 commodities, 3 great jurisdictions, multiple opportunities. The 3 projects we have are 100% owned. We've got a great land package here in Victoria. We've got a terrific land package covering 2 geological domains in central Alaska. And we've also got an advanced gold and silver project in northern New South Wales. So the Woods Point Gold Project, we only acquired that less than 2 months ago. Fantastic land package, underexplored, with a great historical gold mine called Morning Star that produced almost an ounce per tonne. We also have a terrific land package in Alaska. It's high-grade silver zinc VMS, as well as a large IRGS gold target. And we've just finished an $8 million exploration program there this season. It was our 4th season there. And lastly, but never to forget, our Mount Carrington project, JORC Resources, JORC Reserve for Gold, on a mining lease where we get free carried through the development and environmental impact stages. As I mentioned, the JORC Resources, if you combine the silver, the gold and the lead, it's the equivalent of about 3 million ounces of gold. For a market cap of around 40 million, the underlying asset base, I think, is a significant advantage for White Rock and its shareholders in its own right. Woods Point Gold Project photo is the gold mine, Morning Star, the gold plant, 800-metre deep shaft. It came with a 670 square kilometre land package. Central Victoria, not similar rocks to Fosterville that most people will have heard of. And we've identified significant targets already in their own right. Regional exploration, as I've touched on, there's also the in-mine exploration. Great history, operating shaft, operating gold processing plant. We've just announced only this morning the commencement of 11,000 metre drilling program into the gap zone. Above that gap zone, over 500,000 ounces were produced. Below that gap zone, over 300,000 ounces were produced. Why is there a gap? That's what our drilling will find out. Red Mountain, very imaginatively called. We sit 100 kilometres due south of Fairbanks.
1 minute to go, Matt.
Great land package, significant maiden JORC resource, running just over 600 grams per tonne silver equivalent. Comes from just two deposits. Most people might be aware that VMS is coming, camps coming close, as we have multiple targets still to drill. But we also sit in this Tintina Gold Belt, host to Mako, and for the listener, we were there before Northern Star, but also Fort Knox and Donlan. So we have a terrific geological domain in that project. And then Mount Carrington, advanced gold and silver, northern New South Wales, JORC resources, JORC reserves, PFS done, and we get free carried through the development stages with ASX listed Thomson Resources. So my encouragement to the judge would be to consider White Rock. You get great exposure to 3 commodities, 3 projects in 3 jurisdictions. You'd become a top 5 shareholder with a company with great momentum. We were only a market cap of 8 million this time last year, and now we're 40. And with significant news flow from the Alaskan season we've just had and the drilling that we're commencing and doing in Victoria. Thank you.
Wonderful, Matt. Thank you very much. Thank you. To our judges, please.
Matt, three very interesting projects there. Just wondering how you prioritise your time and capital between the 3, and if I forced you to pick one, which would be the most exciting in your view?
So probably Matt, in reverse order. You're supposed to love all your children, but clearly in ascending order, Mount Carrington, which White Rock listed on, is now being developed by ASX listed Thomson Resources, so we're free carried. So we, in fact, other than joint venture committee meetings, we're the minor joint venture partner, even though that project is still ours. So that's actually a really good project advancing situation where it doesn't consume a lot of our time or our money. I think that's really important. So that's a really good cornerstone asset for the investor. Then we've got Alaska. Alaska is seasonal, so we can handle that. You know, the season in Alaska is roughly from May to September, but we've got a terrific team in country, and in this COVID world, that's essential. And so it's run out of a very experienced team of about 40 people, contractors, drillers, geophysicists, etc., out of Fairbanks. So again, you know, we don't try and run that from Ballarat. And then right now, having just acquired the Woods Point Gold Project here in Victoria, again, in the COVID world, it's only a 4-hour drive from where I am here in Ballarat, and that's our focus. So we can actually manage that across those 3 jurisdictions and time zones and stage of project.
Thanks.
Judges?
Mark, can you just give us a bit of a flavour about, you know, what you're actually targeting in the Alaskan asset, what you're targeting in the Victorian asset, what it might look like if you got what you were looking for?
Yeah, so we're two-pronged attack. The silver-rich zinc VMS, the 9 million tonnes that is over 13% zinc equivalent, 2 JORC resources open along strike and down dip. So we did some drilling there again this year. What should that look like? We'd like to double that tonnage at that sort of grade. Being polymetallic, that 13% zinc equivalent is the same as 600 grams a tonne silver equivalent. So very high value in situ value per tonne. So we'd like to add resources to that. There are multiple targets. So that's the VMS side. We also only in January last year announced this 15 square kilometre large IRGS gold project in the western part of the tenement package. And that's not dissimilar to Nova Gold, Fort Knox. So we've got 2 prongs, a gold and a silver-rich zinc VMS.
Paola, I think you were. Oh, sorry.
If you had to sort of put the company in a peer group, are there any similar players that you can compare yourself in terms of where you sit in valuation, and how undervalued do you think you are? Because, you know, most exploration companies think they are, and you know, fairly enough, most are. What do you think about that?
Yeah, look, that's a really good question. So we are a little bit unusual. So we're not a one-trick pony where we can just compare ourselves to a Victorian gold explorer or an Alaskan explorer. What I can tell you is that just on a Victorian gold explorer peer table, we are in the bottom quartile, and that's without considering our Alaskan and our New South Wales assets. So just that alone, and yes, you're dead right, I will never be the last MD that says we're undervalued, because clearly if there is a value gap, then that's the opportunity for the investor, and I think my job is to try and extract some of that value for the investor. Flipped another way, when we merged with the Victorian asset, there had to be an independent expert valuation, and that valued White Rock middle value at 80 million and a top value of 140 million. and our current market cap is only 40 million. So a couple of metrics that you can look at it that way that I think shows, and that's what encourages me to try and get that value gap closed by getting that value into our share price.
Yeah, perfect. Thank you.
So Matt, on the Alaskan project, Red Mountain, South 32, and there's a bunch of folks poking around up there, but if you actually produce a base metals mine, where would you ship the concentrate? Just speak to us about that.
Yeah, so Kingsley, we're only about 80 kilometres due east of the main Parks Highway between Alaska and Fairbanks. So concentrates produced, a zinc con and a silver lead con. Truck to the railhead, that rail goes to Anchorage, all-weather seaport, and then in concentrate either off to Japan or China. It's probably unlikely to go to the Trail smelter in BC, but that's obviously possible. So lots of options once it's in a boat in the Northern Pacific.
Time for one more question, judges.
Matt, just in Victoria, there's lots of people, lots of juniors now trying to find the next fossil down there, probably without too much success. Just wondering what, in your view, what's needed to crack the code?
Yeah, look, that's a good question. So, Matt, we've got a really good 670 square kilometre land package with over 10 historical mines collectively produced over 1 million ounces. That Morningstar mine itself was the forerunner to Western Mining that produced 800,000 ounces. So we've got a fairly good understanding of the regional geology, the dike swarm that we're in. I'm living here in Ballarat. I ran the Ballarat gold mine. I was also in Tassie, so I understand that Victoria narrow vein, high grade nuggety gold reefs are volatile. When you get onto them, they're fantastic, but it's not for the faint-hearted. But therein lies the opportunity. If you understand the geology, you understand the volatility, you have faith in your geologists, and you go with that in the drill bit, I think the results can speak for themselves.
Thanks.
Okay, thank you, Matt, very much for your time. Really appreciated it. So now, ladies and gentlemen, I'd like to invite our investor judges to give us their insight into which company or project that they might hypothetically invest their $1 million in wine. Remember, if you don't want to put it all in one, you can put half and half in. We might bounce the ball according to the list I've got with Matt Griffin. Matt, would you care to go first?
Definitely. Thanks, Gavin, and thanks to all the contestants for some very good pitches, some very exciting projects there in different parts of the world. I think at this end of the market, I always like to have a bit of diversification, so I'll probably split the million into two $500,000 chunks. The first investment would be in Los Cerros. I think some of those drill hits are really exciting. A great part of the world to be looking for big porphyry systems, and it sounds like a good neighbour and some good infrastructure in place. So that would be half, and then the other half, I think we're going to White Rock. And again, the Victorian ground sounds good, sounds prospective. There could be something quite big there. You know, you look at how well Fosterville's gone, and the opportunity to find the next Fosterville, I think, is very exciting. And you've also got the attraction of the other two assets and some different commodity exposures there as well. So that'd be my investment.
Thanks, Matt. Appreciate that. Kingsley.
Yeah, all great projects. So thanks so much to the different presenters. I found it quite difficult to make a decision here. On Missima, I think it's great to have the history there of production, and it's certainly a decent sized resource. Grade at 1 gram, that's probably going to work. The one concern I had with that was with the tailings, and I know that submarine tailings is a thing that's being done. And I probably in this climate want to make sure, as has been indicated by the speaker, that you're going to do the work on that. On Les Cerros, I've poked around a little bit in Colombia, and I do think it's a pretty good place to be. But I take note of some of the comments of the other speakers about where you are in Colombia, and this is in the right place. It's not in the place where the states are difficult to deal with, or there are other historical issues. And I do like the fact that there's a bit of a string of pearls thing happening with the porphyries. But I'll leave those two aside. I'm going to split my stake. And I'm going to go for half in Mako gold and half in White Rock. So I'll explain that. I've been following Cote d'Ivoire for a bit. I'm not invested in Cote d'Ivoire, but I really like the fact that there's a very big greenstone prospect there. And I believe in putting money into things so you follow them. And I think this is one worth following, given that the drill program is still yet really to roll out. But there's some good shows already, so I think that's interesting. And with White Rock, you know, I like the fact that there is that base metal prospect in Alaska where there is a bunch of people going. And in this day and age, jurisdictions are getting, shall we say, more important. And if you've got some interesting base metals and other silver, in this case, shows in Alaska, that's a nice adjunct to anything anybody already owns in Latin America, where we're seeing a lot greater tensions in Chile and Peru concerning what might happen with royalties and the like. So I think half each into White Rock and Mako. And, you know, as Matt shared, we'd all like to find the next Fosterville, and I wish him luck with that. But at least you're in the game to have some money in the name. So I'm with splitting both that way.
Lovely. Thank you, Kingsley. Thank you very much. Paola.
Yeah. So I'm gonna do the same split that the other judges have done. I think these 4 stories are really interesting, and they all have different benefits. Obviously, I did feel that time management wise, I couldn't get a good grip of the full story in terms of Kingston, so I'm not gonna pick that one. And the 2 that I'm picking are White Rock and Los Cerros, and the reason is first in terms of the location where the projects that Los Cerros has is fabulous. I've worked with several companies in that area. We're going to continue to see a lot of gold and copper coming out of that region, and it's even though Colombia still has some security issues, that region is, you know, as safest as you can get. And and I also thought that Jason was the one that used the time the best, as efficiently as possible. Matt did a really good job with time, and that's my second pick. I like the fact that there's a portfolio, so there's a global perspective, there's different assets, and there's different commodities that give you a bit more diversification. And in the flip side, that's why I didn't pick Mako, although I know Peter, so I feel a little bit guilty of not picking him. But the fact that there was no different diversification there, that made me a little bit wary. So my vote then goes to White Rock and Los Cerros.
Okay, thanks, Paola. Jeremy, you get the final say.
I'm not sure about the final say, but I'll have a go. So I like focus. I don't like diversification, because as an investor, I can achieve diversification myself. So Matt's story is out from that point of view, from my point of view. I like the Los Cerros story. I think the idea of the long intercepts is very appealing. I also like the fact that Misamer have managed to put a project together, or Kingston have put a project together that actually hangs together, and I can see a capital structure going forward that might work for that project. Having said that, I think the cost structures there are probably going to be quite challenging. The jurisdiction is quite challenging. Likewise, the jurisdiction in Colombia is also challenging. So this brings me to Mako. I like Mako because, one, it's focused. Peter's been there and he's done this before. And this has got a very similar look to Orbis about it in terms of what's going on now. You're looking at a market capitalization of 40 odd million, an EV of about 30 million. Even if you only had 1 million ounces, you'd be looking at $30 an ounce. So my $1 million is going to these guys because I think they'll make good use of it. And I think the chance of the share price going up appreciably from that position is quite significant.
So did I just hear you say, Jeremy, you're putting your whole $1 million into Mako?
That's correct.
Okay. Well, first of all, we have a tie. We have White Rock with 1.5 and now Mako with 1.5. So I have the honour of officially declaring that the pitch battle is a tie between Mako and White Rock. To our 4 companies, I thought that your presentations were fantastic, and they are all fine examples of what Australian mining companies are achieving, not just in Australia, but around the world. And we should all be very proud of that. To our four judges, thank you very much. You made my job so much easier because you're so inquisitive. And with that, and having declared joint winners of Mako Gold and White Rock, thank you very much. And back to the rest. I might finish with one last point, and that is that before we move on, may I remind you that IMARC, the big Melbourne-based conference and exhibition, is timed for the 31st of January to the 2nd of February here in Melbourne. I encourage you to register and participate as we emerge from lockdown. So from me here in lockdown Melbourne, as we call bad haircut country, until later in the week, thank you judges, thank you contestants, and thank you ladies and gentlemen. Andrew, back to you. Bye.
Thank you very, very much, and look forward to seeing you all again soon. Thank you very much. Bye-bye.
Bye, everyone.
Thank you.
Bye.
Bye.
Goodbye.